Let me explain what DAX 6 rules are about. These are mandatory disclosure rules for tax arrangements which are perceived as aggressive. The background is a European Union law directive which obliges all member states to implement a set of rules for such disclosures. The directive has been implemented in June 2018. But first disclosures will only need to be made by the end of August this year. However, we will need to go back until the 25th of June 2018 to identify arrangements that may be reportable and then report them in the middle of this year. It is very important to note that the schemes that need to be reported are not illegal. They are perfectly feasible. However, the tax authorities shall be put in a position to proactively address certain structures that may be new and may be perceived as aggressive and unwanted. And the second aspect is that the tax authorities, when assessing a certain taxpayer, shall be able to check what kind of aggressive structures the taxpayer may have implemented and hence consider this either in the tax assessment process or in a future tax audit. Primarily, the burden to report is with so-called intermediaries. The directive defines an intermediary as someone who is either designing, marketing, implementing, or organizing a reportable arrangement. Naturally, these are tax lawyers, other legal advisors, but these could also be banks, insurance companies, or other financial institutions that are marketing structured products for clients.
Multinational groups, when complying with the reporting obligations under the DAX 6 directive, will be facing a number of challenges. Firstly, and most importantly, is consistency. Given that taxpayers will be located in different jurisdictions, each jurisdiction will have its own national law, which might be different from the national law of the other jurisdictions because they may have implemented the directive in a different way. Each local taxing authority may have its own view and interpretation on DAX 6. They may publish different rules, different guidance for taxpayers. For these reasons, we at Jones Day believe that it would be reasonable for a taxpayer to suggest to receive from intermediary service providers in advance of the filing whether a particular transaction will be reportable or not. To the extent possible, taxpayers should be provided as well with the draft filing that intermediaries may make with the relevant tax authorities. With that approach, we believe that taxpayers can get consistency in this reporting. This also takes us to the second main challenge, which is the need to have a global tax compliance internal policy where taxpayers has to set very clear rules as to who is involved in the process, who should be assessing whether a transaction is reportable or not, who will be responsible for making a decision on the reporting, and who will be responsible for making effective that reporting. And also, the organizations need to identify the person dealing with the intermediaries to get things done in a consistent way. And thirdly, we also believe that it will be necessary for taxpayers and also intermediaries to have in place sort of database or a system in order to gather information regarding these potentially reportable transactions where they can populate the data about the transactions and they can store the data for the future reporting. And these new obligations apply retroactively back to June 2018, so that it will be important for taxpayers and intermediaries to gather information from the relevant 18 months. Overall, we at Jones Day believe that the application of this new reporting obligation would imply a time-consuming exercise for taxpayers and obviously intermediaries, and they will need to devote additional resources for two main reasons. One, complying with the rules under DAX 6 in order to avoid penalties, which can be heavy penalties depending on each jurisdiction, and more importantly, by complying properly with DAX 6 obligations, taxpayers and intermediary may make the reporting in a particular way so that the particular transaction is respected by the tax authorities if in the end it's not tax aggressive planning.